I have a slogan called which is "Screw it, just do it." If you're thrown in the deep end, if you're thrown into a swimming pool, as long as you've got your parents watching you, the chances are you'll end up swimming. The best way of learning to run a business is just to try it. And by getting out there and trying things, you will just through, struggling and trying, you can become an entrepreneur. And I think that applies to most people. And if they fall flat on their face, they'll try again. And the next time round, I suspect they'll be successful.
Hi, welcome to this video, Dave, which is all about how banks and hedge funds make billions in profit per annum with a very simple strategy. And if you learn what they do, you can actually do the opposite and beat the majority of fund managers, which will become clear as we go through the video. Now, I've kicked off the start of the video with a clip there of Jordan Belfont, who the so-called Wolf of Wall Street. He was known for ripping off his clients. He ended up in jail, and it's now been made into a film with Leonardo DiCaprio. And he basically illustrates the greed that exists in, the bank and hedge fund industry. Now, many people think that, banks and hedge funds trade Forex and make money for clients. It's totally not true. If you look at the performance of managed funds, you'll see it's very, very poor. Very few can actually get into double figures per annum. And there was a very interesting study done which shows basically the strategy the banks and hedge funds use to make money. And it was done by a guy called Simon Lacker, and he published a book called The Hedge Fund Mirage. And in that book, he actually worked out that if you'd invested in the average hedge fund in 1998 through to the present day, you'd have been actually better off in performance terms by double to have invested in US T-bills, i.e. fixed interest. He also worked out that that performance is without all the hedge funds that were shut down in the period through losses. And he worked out that hedge funds that have been shut down totaled around 700, I think it was billion in client losses. But the hedge funds have made something like 500 billion in commission. And this is the secret of hedge funds and banks, how they make money. They don't make money by making client profits. They turn client equity into commission, which means they overtrade. You'll see a lot of hype about day trading, scalping, high frequency trading. It doesn't work to make money. All you are doing is trading random noise in the market. But to hedge funds and banks, it doesn't matter. They will make commission by trading regularly. And you hear a lot about the science of Forex markets and so forth. There's no science involved at all. It's a game of probabilities. The science myth is totally inaccurate. So banks and hedge funds are just trading huge volumes of trades to generate commission. So the lesson you can learn is to basically not trade too often. You're under no pressure to make commission. So if you look at a Forex chart, you will see long-term trends that last for weeks or months or sometimes even years. And all you have to do is just get into those trends and hold them for profit, okay? So you're trading longer term, you've got the odds on your side, and you can just basically trade infrequently and make money. Now, can you beat 10% per annum? I think you can. Now, hedge funds and banks struggle to do this, but your advantage is you can be very patient and you can basically wait for the high odds opportunities. Now, a lot of traders think that banks and hedge funds have really sophisticated trading systems. Well, they do, but they don't make money. It's proven that simple systems work best. You're trading probabilities, and if advanced systems really did work, then more traders would make money, and they don't. The percentage of traders who lose money remains the same. It's 90%. It was that figure 50 years ago. It's that figure today, and it will be in 50 years' time. So what you can learn from banks and hedge funds is not to be intimidated by the so-called professionals. Get yourself a simple system which is simply based around probabilities. Be patient and wait for the high odds opportunities, and then you can make a lot of money. And I think, in the Forex industry today, there is a lot of hype about banks and hedge funds making money. The facts don't prove it, and it's one of those things where traders are intimidated by the markets. They shouldn't be. If you want to make money, do what most traders don't. Trade longer term, don't trade short term. Keep your system very simple, and you can make a lot of money trading the Forex markets. Thank you very much for watching this video. Take care. Have a good day.
Just don't take no for an answer. I mean, I think if you believe in what you're doing, many people will tell you, why you're mistaken, why it'll never work. But if you really believe passionately in what you're doing, just keep going. Keep pushing on, and until you either succeed or at least you realise that it's just not going to happen. And then if you don't succeed, pick yourself up and try again. And ultimately, if you're that determined, you will succeed in life. And if you don't, you'll have a hell of a lot of fun trying.